Hello and welcome. My name is Marco Nunez. I am Vice President of Operations for Essential StaffCARE. I want to thank Advanced Partners so much for having us today and hosting this wonderful webinar. A little bit about us, if you are unfamiliar with Essential StaffCARE, we are the largest provider of health benefits to the staffing industry, processing over 2.5 million electronic and paper enrollment forms every year, serving over 2,500 staffing companies. And quality of service is really a huge focus, both for the employee that enrolls in our benefits and the employer that is offering them. We just finished up our third year of our clearly rated client satisfaction survey, and we're excited to be announcing those results here in the near future. But as you can see, we work very hard to meet our customers' needs and provide them an enormous amount of value in the day-to-day operations. We've been doing this for going on 25 years now. So that 25 years has given us a very unique vantage point in the staffing industry. And we're going to talk about some of the things that we've learned here over this 25 years, but really over the last 10 plus years of the Affordable Care Act. It's obviously made some huge shifts in the benefits landscape for employees. Today we're going to talk about the importance and value of voluntary benefits in particular for your recruiting and retention efforts. We're going to look at the financial and benefit realities in the current marketplace that kind of drive this value possibility or opportunity for temporary workers. And then we're going to give you some practical suggestions at the end so that regardless of what benefits provider you use, you can take some of the best practices that we use and apply them for yourself and reap the benefits of them. So just to kind of level set us and get us on the same page here, obviously at the end of the day, doesn't matter if we're in a job market where there are a ton of bodies chasing a smaller number of jobs, or if we're in one where there are a small number of jobs, or sorry, a larger number of jobs and a smaller number of people. Either one of those dynamics in the labor market, staffing firms are trying to do the exact same thing, which is recruit the best talent from their particular marketplace and retain them as long as they can. That is a core function for any staffing company to survive and grow, right? Is to be able to get that best talent, to be able to provide it to their clients and keep them as long as they can. So obviously the way that you do that in your marketplace is by providing more value to those workers that are in your potential worker pool than your competitor. So that then leads to a question of what exactly is value? And obviously definitionally it's relative worth, utility, or importance. And the important word there is relative. The example I like to use is coal. So 200 years ago, if you handed your workers a pail of coal on the way out the door at the end of a day of work, they would probably greatly appreciate that. That was going to allow them to heat their home. They wouldn't have to spend money on coal themselves. They can have hot dinner that night. Fast forward the clock to today, and if you hand a pail of coal to each worker walking out at the end of their day, they're probably going to hit you with it. They're not going to be very excited about that. There's no relative value for their life day. So what we see is that value is really driven by the core needs of your target audience. And we're in a labor market right now where there's a lot of focus that's been going to pay parity. And pay is always going to be the number one driver, obviously. That's why anybody goes and gets a job, first and foremost, is to make money. But what we're seeing in the current marketplace is that pay really is being mitigated in its impact because all pay are just being matched across the board, right? Somebody comes in and goes, hey, I'm being offered $2 an hour more for the same job at a different factory right down the street. You hear that enough times, you're going to go back to the client. The client's going to go, fine, offer $2 an hour more if that's what we need to do to get people. That's what's happening in the marketplace right now. So pay, while it is the number one driver of people going there, is really limited in what you're going to be able to do with it right now to recruit and retain folks in this market. So when we're talking about these voluntary benefits, let's start by recognizing that more and more employers and employees are seeing the need for this. And then a little bit later, we're going to start looking at some of the reasons why. And the better that you understand these realities of your workers, the more effective you're going to be at communicating. Well, first of all, it's selecting the right things to offer them. And then once you're offering those, really communicating those in a way that's going to resonate with them. So May 2021, Willis Towers Watson survey showing that more and more employers, 94% of employers believe additional voluntary benefits will be key over the next 3 years. We're going to talk about specifically why that is just a little bit later. And then you see also that employees are saying the same thing. 66% of workplace benefits say that workplace benefits ease their stress. And then you look at the difference between 2019 and 2020 on this MetLife benefits survey, and you see an increase just even over that 1 year period of time of employees saying, hey, I believe that my employer is responsible for my health and well-being and helping provide the right kind of benefits for me. But the realities from there are really about what they're experiencing on the ground in their day-to-day life. So 80% of applicants medical benefits as the most desired perk today. 77% of applicants say benefits are very important to job selection, and 69% said that they might actually choose one job over the other based on the benefits that they're being offered. Why? First part of this is because of the financial realities of today's hourly workers, but really just the average worker in this country. These stats haven't changed much over the last decade or two, so you've probably seen this kind of information before. But the vast majority of the average worker out there is living paycheck to paycheck. They don't have money for emergencies. And what we're seeing is that that's really exacerbated when it comes to their day-to-day medical care. 56% of Americans can't cover a $1,000 emergency expense without savings. That means they're having to go either to a credit card if they have it, a payday loan, family members, friends, whatever they're able to do, none of which are great options for them. 32% of Americans have some kind of medical debt, with 28% of those owing $10,000 or more, and then 54% of those with medical debt have defaulted. So we see that day-to-day medical needs in general are really exacerbating the financial struggles of the average person in this country. Don't have a lot of money, but what we're going to see is that the current benefits landscape is really forcing the average person to pay for their annual medical needs really directly out of their pocket. So that's where we're going to shift to start talking about how voluntary benefits specifically can really help provide this unique value to your temporary workers. In order to look at that, let's start by looking at how we really define value in voluntary benefits. Is it affordable? Is it usable? Does it meet your workers' expectations? Is it effective? These are the things your workers are looking at when they're analyzing what's been offered them as they're onboarding with your companies. And so obviously affordability is hugely important. It's got to be something where for what they are looking to get out of it, they don't feel like they're being asked to pay an exorbitant amount. Our basic plan that is offered most throughout the country is $19.98 a week. Very affordable, very accessible. Is it usable? Is it something where they're going to be able to go in and have a good experience using this thing? It's going to be accessed at a lot of different places throughout the place where they live or the country. And is it going to meet their expectations and be effective? If you can determine value, the benefits you're offering based on these things, you're going to be highly successful. Because the Affordable Care Act has really shifted a lot of the benefits landscape for all of us. And I'll give a caveat that I always give when I start talking about the Affordable Care Act, and that is nothing I'm about to say has any political bent to it whatsoever. This is just pure on-the-ground analysis of what we've seen from the very unique vantage point we've had on the impact of the Affordable Care Act, especially on staffing companies, okay? So prior to the Affordable Care Act, insurance carriers were able to balance the cost, the premium of a plan with the benefits that it paid out in a number of different ways. And actually, I'm getting ahead of myself. Prior to the ACA, a lot of staffing companies didn't offer benefits. The reasons are right there on your screen. It didn't make any sense. There was no competitive value in it. Your competitors weren't doing it as well. Your employers weren't clamoring for it, saying, hey, we're not going to use your staffing firm if you don't offer major medical insurance to your employees. And obviously, it's extremely expensive in a high turnover environment, which we'll talk about later. And so there weren't a lot of companies in the staffing industry that were really offering benefits or focused on them. The Affordable Care Act has obviously changed that enormously. And there's been an uneven, unintentional impact of the way that the Affordable Care Act has landed on the different employer segments in our country. Large group employers were really largely unaffected by the Affordable Care Act. They were already locked into some kind of plan with a carrier. Very few adjustments had to be made by these carriers to up-level them to the new requirements of the Affordable Care Act. And because the carrier had, in many cases, several years of claims data with these large employers, it was very easy for them just to keep the truck rolling on down the line. And when you look at the large group market, since the beginning of the ACA, deductibles for plans have been quite low, and as well as the cost for them. When you get to the small group market is where we really see the ground zero impact of the Affordable Care Act, right? So these smaller companies, and again, especially in the staffing, because of the 400% turnover of temporary workers in the staffing industry, and because of the Affordable Care Act's applicable large employer requirements, which determines whether or not you have to offer ACA benefits or not under the law, a staffing company a quarter the size of a normal, traditional, more stable employee population company now qualifies under the Affordable Care Act. So a much smaller staffing firm, because they've got this churn of people coming in and those numbers rack up and trigger the ACA requirements, is going to qualify and have to offer this versus a smaller company with a more stable population. And obviously, on the individual side of the market, there was enormous benefit for folks, especially folks with pre-existing conditions and things like that. So prior to the Affordable Care Act, carriers had a number of different tools at their disposal to allow them to balance out the cost of a plan that they were building and the benefits paid out. You see there on the right side, they were able to adjust the actual health care benefits that were provided. If it was a population of entirely male employees, no need for maternity. So, they could choose to, carve out maternity and not include it. That's obviously something you can't do in the ACA because maternity has to be included in all ACA compliant plans. You could put annual limits on the plan. So a lot of times prior to the Affordable Care Act, insurance carriers would keep premium prices low on plans by putting a $2.5 million lifetime limit on benefits paid out. So you're still able to get a very rich plan, but the carrier is able to, by putting that cap on the end, have some kind of mathematical certainty that they're not going to, lose their shirt, and they're able to keep the premium low as a result of that. There were obviously a lot more health screening and an ability to create customized plans that were available prior to the ACA. So you see then the Affordable Care Act completely changed that balancing mechanism. It required a new floor of ceilings that all ACA compliant plans now meet. So it raised the overall level of healthcare benefits, taking away the carrier's ability to not include coverage for certain types of things in order to try and keep costs low. It now put this infinity sign on the back end of the equation for the insurance carrier. So under Affordable Care Act plans, doesn't matter if you're signed up for a bronze plan or a platinum plan, when you reach that plan's out-of-pocket maximum for the year, which is usually somewhere around $8,000, $8,500 right now, I think, the insurance carrier is on the hook for 100% of your claims for the remainder of the period of that plan's year. So that obviously put an enormous amount of risk and liability on the shoulder of the carriers that they didn't have before, which forced them to post-ACA start to raise prices on premiums. You now have to have guarantee issue. You can't not issue to somebody based on health conditions. And then there were those minimum plan coverage requirements. So what we see then is this new equilibrium that has been reached. And the effects, the impact of that equilibrium is that premiums had to go up for a few years. They've now stabilized on the exchanges. But for the first few years, premiums really had to go up as carriers were trying to figure out how to price these things. Deductibles really had to go up as well to take off some of that cost pressure that they now had on the back end. And we saw coinsurance benefits go down and out-of-pocket maxes go up. So what we see then today is the average bronze plan on the ACA exchange has a deductible of $6,900, almost $7,000. Now, the average person in this country goes to the doctor less than 3 times a year and incurs less than $5,000 a year in annual medical expenses. So you kind of match the puzzle pieces up and you can see what's happening. There's a donut hole that's been created for the average person. Why are we talking about these bronze plans? Because the average person that goes to the doctor less than 3 times a year is not looking for a platinum plan that's going to cost them a lot more in monthly premium and that they're not ever hardly going to use. They're looking for the most accessible, lowest cost plan, which is these bronze plans. So what that means is the average person looking for the most accessible, cost-effective plan that they're not going to use all that much ends up with a plan that more likely than not doesn't have any copay benefits. They're paying out of pocket 100% until the deductible and then the out-of-pocket max is reached. And again, in most cases, that's $5,000, $6,000, $7,000 that they're having to pay out of their own pocket in addition to paying for their insurance premiums for this bronze level plan. So as you see there at the bottom, under the ACA, these bronze level plans are requiring an employee to give up almost 10% of their paycheck. And then just for the opportunity to spend another $5,000 or $6,000 or $7,000 of their medical costs for that year out of their own pocket. There's obviously not an enormous amount of value, and that creates then again that kind of need donut hole for the average person, and temporary workers especially, for their day-to-day medical needs. This is where an indemnity plan, like the Essential StaffCARE fixed indemnity plan, comes into play. Now, indemnity plans, dental, vision, term life, these are what are known as a category of benefits under the Affordable Care Act called accepted benefits, EXCEPTED, accepted benefits. Accepted benefits do not have to comply with that high ceiling of coverage requirements. A lot of the flexibility that plans had prior to the ACA, these accepted benefit plans, especially the indemnity plan, have. So what you're able to do with an indemnity plan then is design a plan that is very accessible and affordable, again, less than $20 a week for our major Plan 1 design, but also that gives you support for your day-to-day medical needs. So you see there, plan features, you've got no deductible, you've got no copay, there's no waiting periods, there's no pre-existing conditions. There are some plans out there that still include this. We do not include pre-existing conditions. It's very affordable, and they get first dollar benefits. They don't have to, there's no waiting periods. You don't have to wait 6 months before you can start using it. Like, you pay your premium, following Monday, you're good to go, and it's ready. The benefits help provide support for cost of doctor's office visits, urgent care visits, emergency room, in and out patient hospital care, prescription drugs, labs, and x-rays. The day-to-day medical needs that the average person is going to encounter. So looking a little deeper on how the ACA fixed indemnity plan helps, we talked about this before. We had Milliman Actuaries do a study for us a few years ago, and they came back with the 84% of the average worker was spending less than $5,000 a year in medical expenses. And you can see that 95% of workers were incurring less than $15,000 a year. So the ACA fixed indemnity plan, and any well-designed indemnity plan, is really designed to meet those day-to-day needs and help cover the cost of those $5,000 of day-to-day medical care needs that the average person has. And you can see how that lines up with that deductible on the average ACA bronze plan. So again, for somebody that doesn't expect to have an enormous amount of costs for their medical care, a voluntary benefits plan like an indemnity plan really enables you to provide your workers access to something that is extremely affordable, extremely usable, and really meets their day-to-day medical needs, meets them exactly where they're at right now. We also wanted to share some best practices that we use. And again, regardless of what benefit provider you use, these are best practices that we use that we have really found have been a kind of a secret to our success over the last several years. The first one of those is understanding the importance of employer-sponsored plans. Even voluntary benefits like the ESC fixed indemnity plan, it is an employer-sponsored group plan. That means the only way that a worker can get access to our ESC fixed indemnity plan is through a staffing company, through your company. Understanding the value of that is going to change the way you're going to communicate to your workers about benefits. They can't go online and hit the Googles and find the ESC fixed indemnity plan and enroll in it. That option's not available. We don't offer this plan to consumers on the individual market. We only offer this plan through staffing firms, through the employer. Whatever plan you're offering, it's going to be the same way. If you're offering a group insurance plan, voluntary benefit or not, you are offering a set of benefits that those workers are only able to get through you. And that is something that's very important to highlight to them at the beginning. And the customers, the clients that we have that are most successful in leveraging the offering of our benefits for recruiting and retention are the ones that most understand that first circle there and that really communicate to their folks when they're onboarding them the uniqueness of the opportunity they're having to enroll in these benefits. The second thing is focus on meaningful benefits to eliminate the paradox of choice. With the emergence of millennials and Gen Z, there's a lot of talk about how much choice they like. They like a lot of choice, and that's very true. But there's a concept known as the paradox of choice that certainly we've seen enter into the benefits landscape, and that is that past a certain point, you actually start giving people analysis paralysis. They're unable to make a decision because there's too many choices put up before them. We actually have some studies that we use internally. One shows a staffing company that we took over for that was offering, I think, 26 different products to their workers, and they had like maybe 2% enrollment or something like that. And then we look at our approach where we're offering probably less than 6 overall, and we've got 30-40% enrollment in the fixed indemnity plan. So yes, choice is good, but too much choice is not good. So you really want to focus on offering meaningful benefits that are valuable that, going back to circle number 1, they can only get through you, okay? We can all go online right now and find pet insurance. We can find a million different types of pet insurance right now, and we can go sign up for it and be off to the races. Offering your workers that are coming in benefits that they can go get anywhere online is not presenting them with a lot of value. Offering them benefits that have been curated for their specific needs and that are only available through you, the worker, that's a totally different level of value you're offering. Top-down communication and adoption of all new processes at all levels. This one's very critical because obviously in the staffing world, you've got executives at the top making decisions, and then you've got folks going all the way down to the branch level who are executing those decisions and actually interacting and engaging with the workers. Ensuring that everyone in your organization is on the same page and that there is follow-up and oversight on processes that you have in place around benefits offering ensures that your workers that are coming in are hearing the same message consistently over and over again, and that you're communicating effectively the value of the things that you're offering them and why they should prefer to come and work with you and stay with you versus your competitors. Number 4 and number 5 together, enroll or decline at the time of onboarding and mandating receive, accepts, or declines. This is hugely important for a couple of reasons. One, you're catching the person when they are thinking about filling out all of their benefits things. Obviously, in the staffing world, there's a bit of a lag sometimes between somebody filling out their onboarding information and them actually getting placed. So if you wait and don't make an offer of benefits until they actually get placed, now you're having to go back and scramble. Now people are having to reach out to this worker and try and get them to come back in or try and get them to look at their email and fill out the benefit selection. It's a highly inefficient process at that point, and you're not guaranteeing that you're making a coverage to everybody. If it's part of your overall business flow and processes that, yes, every person is part of our onboarding stack, they get offered these benefits and they are required to either accept or decline them so that we have a copy of that. That standardizes your whole process and makes sure that everybody in your organization is doing the thing that you want done the way you want it done. B, that also provides you coverage should you ever get into any kind of issues on the ERISA or DOL front. Should someone ever come in and claim that they were discriminated against because their coworker got offered benefits and they didn't get offered, you can go back to your records and say, nope, we actually got it right here. We mandate it as part of our process that at onboarding we get an accepted decline, and here's this person's accepted decline. So it can really provide you some back-end cover and support on that as well. And then number 6, finally, automate the file feed process. Benefits can obviously be a very cumbersome lift if you don't have the right processes in place. We've spent the last 25 years really designing a administrative platform that works for hourly, high turnover, weekly pay, or bi-weekly, monthly, however you need to do it. Automating that file feed process is going to take a whole load off of your staff. It's going to be a lot less stressful for everyone, and it's going to make the offering of benefits a much easier lift for everybody inside of your organization. We want to look at a study. So this is kind of the results of the best practices that we've just talked about on these next two slides. The first is what we found to be a direct correlation between the offering of our ESC fixed indemnity plan and recruiting and retention. So we did a study of over 510,000 workers, and we found that workers that enrolled in our indemnity benefit plan stayed 47% longer than their counterparts that did not. That's a significant amount of time. You're looking at a minimum several more days of billable time that these workers were on the job, and again, because they were enrolled in these benefits. It really doesn't matter the reason. There may be some workers out there that are just looking for benefits because that's what they need. If you're not offering them the right benefits, they're not going to come to your place. So whatever those reasons are, what we really found is there's a direct link between your ability to recruit and then retain folks for longer and the kind of benefits that you're offering them. And then again, some examples of what we've really seen on the ground. And we have 25 years of examples of this, and they all look the same. When we go in and put our best practices in place and our administrative processes in place, we have the same experience. Our predecessors usually have 5 or 6% enrollment in plans, and we usually come in and within a year or so, we're up to 30 to 40% enrollment in plans. And again, it's because of the processes we put in place. It really starts with the benefits. So again, we're trying to provide information that's valuable to you, whether or not you use us for benefits or not. So as long as you make sure that the benefit plan that you're offering is valuable, is affordable and usable for your workers, you're going to be able to see the same kind of benefits and the same increase in enrollment. It starts with offering them something of value. And then once you have that in place, the workers just respond to that. Again, these are voluntary benefits. They're not forced to enroll in this, so they're paying out of their own pocket. And we see these kind of increases in enrollment when we take over because our benefit plan is designed to provide value for those workers, and they see it immediately when they have it on their enrollment form. So giving you some questions, again, as you're looking at your own benefit offering and trying to determine the value there. Is the benefit easily accessed and used? You want to make sure that whatever benefit you're offering to your folks is something that's going to provide them a great experience. Are they getting an ID card? Are they getting it quickly? When they go in, are they having to submit claims on the back end and then wait for a check to come in, or is the provider doing that for them? And that's what happens with our plan. 5% of cases, you just go in, have your visit, and the provider actually files the claim, and the payment's made to them from the plan. Is it payroll deducted? That's obviously a highly efficient and easy process for folks so that they don't have to worry about putting it on credit cards or things like that. Is the benefit priced at a preferred group rate? Again, there's enormous value in offering a group plan versus just a regular individual plan that anybody could just go online and sign up for in the individual market. And then finally, does it match the employee's needs? And that's really the critical one. Is it providing them help and support for their day-to-day medical needs that they're running into when they need to go see a doctor for a cold or the flu, or they have a short procedure they need to go in for, urgent care clinic, labs, x-rays, those kind of things. If your answers are yes to these questions, then you can be confident that you're offering something that your folks are going to find of value. And that's where then we want to transition into this last kind of section here, and then we'll open it up for some questions and answers. But we want to just provide some real practical, on-the-ground opportunities that we've seen that staffing companies really have to better impact the benefits they're offering, again, regardless of who their benefit provider is. This last section really came out of some research we were doing a couple of years ago. We were looking at a lot of different staffing companies' web pages and their benefit section specifically. We saw the same pattern, which was that there wasn't an enormous amount of depth or focus to what a lot of the staffing firms we were looking at were putting on their benefit page. It would usually say something like, we offer medical benefits, and they would have a series of bullets under it, and it would have things like 401k, paid leave, medical insurance or something like that. And so out of that, we actually built a toolkit and a process for our clients, and then now we're sharing some of this stuff with you all as well as our attempt to give you some value here today for giving us your time. All right, so some tools you can use to promote your benefit offerings. Obviously, you got prospective employees, you have benefits information for your website. So making sure that your benefits page of your website, first of all, making sure you have one, because again, more and more workers, as you saw from those stats, are expecting this from their employers, so they are looking for this information. So step number one, make sure you got a benefits page on your site. Step number two, make sure that it is really doing a good job of expressing all of the value you're providing. We offer medical insurance doesn't tell the person anything about the value that you're offering. So giving them more specifics about the plan that you're offering, what kind of things it covers, how it can help them. Your LinkedIn ads, same thing. Having a bullet or two that very quickly but effectively describes the kind of medical benefits or voluntary benefits, that you're offering to folks, and then blurbs and job listings as well. So these are your kind of core ways that you're able to get those prospective employees. And then obviously when somebody comes in and you're onboarding them, if you have a quick, efficient script that you can provide to the folks that help onboard them where they can say something specific about the benefits that are being offered, that again is another opportunity to kind of sell effectively the value that you're providing those workers. New hires and existing employers. So obviously you have digital flyers that can either be provided to you by the carrier or that you can create yourself, talking about the kind of benefits that are offered. You can send out e-blasts to your folks, videos, posters, flyers in the office, newsletters, things like that. There's lots of obviously different opportunities throughout the year to say, hey, open enrollment's going to come up again in a couple months. We just wanted to let everybody know what kind of benefits you have access to through us as your employer. And then prospective clients, incorporating the information into sales tools and explaining to them, hey, these are the benefits that we offer folks, and this is why, and this is the impact that we see from it. If you're offering the right kind of benefits, you're going to have no problem getting testimonials from your workers. We have pages and pages of testimonials from client workers and anecdotal testimonials from their employees that enroll in the plan. Having those incorporated in your sales material and saying, look, here's what our employees say about the kind of benefits that we offer, can certainly differentiate you in that marketplace when you're talking to new clients as well. So that wraps up this section of it. I got a little quicker than I was expecting to, but yay. And that saves your all's time a little bit, but we do have a couple of questions that we wanted to go over. And certainly if you have any questions, please feel free to put them in. So we've got current broker, options. Gotcha. Yeah. Well, we'll be more than happy, Richard, to reach out and chat with you about that. A couple of other questions that we've seen come in. What is the biggest pitfall you've seen with the ACA? That's a great question. I think one of the biggest struggles we're seeing right now, and I think a lot of people think, the Affordable Care Act is old news. It's been around for so long, and there's been no major changes in it. We're still seeing some staffing firms struggle with things like, variable hour and look-back rule and how to determine, who's full-time eligible and who's not. It's a complicated process and system. So we're always doing what we can to work with our partners to provide more information about that stuff as well. Another question, what's the biggest ACA penalty you've seen? Just under $92 million. I think it was due to a miscoding, and thankfully we had all the information and a process in place for the client. They were able to very quickly go back to the IRS and provide them with the supporting information. Again, that's why this documentation and doing everything at time of onboarding is so critical, because it just allows you to efficiently have all the information you need. And if anything ever comes up, you get it to the administrative department it needs to go. And they were okay. They were able to get out of that thing. Okay, last question we have. So we're good. What do you expect to see in the future in regards to the ACA? That is a great question as well. Obviously we saw several years of discussions around adjusting the ACA and making changes to the ACA. Both parties had plenty of opportunity at various points to do whatever they wanted because of the coverage they had in the White House and in Congress, and neither one of them were able to get anything done. So I don't know that there's going to be anything major. One thing that we are seeing that is going to change the landscape a good bit is the individual coverage health reimbursement arrangement. And we are very excited about that product that we're getting ready to roll out here very soon. But it allows employers that are under the ACA to comply with their ACA obligations by reimbursing employees for their individual coverage. They can go sign up on an individual plan on the exchanges, which have stabilized a lot and are now actually offering great access to a wide range of plans at a very affordable cost. And by reimbursing them for a portion of their individual plan payment, they're able actually to comply with the ACA, which gets the employer out of the having to offer major medical business, which is obviously a huge, complex, challenging thing to do at times. So we think that is definitely going to be something that, even though it's not legislative, I mean, it was when the regulations came out, but that's probably going to start shifting ACA compliance solutions that employers are leaning on. But I would be surprised if there was any major changes to the ACA over the next year or two. I think they'll probably, play with little things and tweak things around the edges. But I don't know that we're going to see anything major. Let's see, what benefit besides medical do staffing employees seem to want the most? Dental vision. Medical, dental, vision is kind of the three. And then from there, term life is very popular. And critical illness is one that we've actually seen, becoming more and more popular and more requested by workers. And then I'd probably put accident after critical illness. But really the kind of triumvirate is medical, dental, and vision. Those are by far the three most popular. Okay, and we had another request for an intro packet. Be happy to send that along to y'all. So if there aren't any other questions, I'm going to give you all some of your time back for the day, and thank you very much for sharing your time with me and us today. And those of you that requested us to reach out, we will certainly do that. And anyone else, you're free to call us or visit our website. And if you have any questions, we're happy to reach out to you as quickly as we can. Thank you all so much for your time today.